All right, I want to welcome everyone today to another Wednesday afternoon sales session here with DMI. Today, we're going to change it up a little bit and not necessarily talk about sales concepts or the different prospecting initiatives that we've initiated. Today, we're going to talk a little bit about life insurance. So since that is not my bailiwick, I am going to hand it off to Amy and let her go.
Thanks, Jim. Thanks, everybody, for tuning in. Certainly appreciate it. I've got a guest with us, Dave, today. Dave is a partner with DMI here. He's one of our support people. So he's going to go over some great simplified issue products that we have. So if you've got some clients that are looking for simplified issue to get the policies issued, 24, 48 hours, we've got some options for you. So without further ado, Dave, thank you for joining us. Certainly appreciate it and your expertise today.
All right, thank you very much for having me. Happy to be here and happy to review these products and programs with you guys. So I'm going to go ahead and start out by doing a little bit of a high-level overview before we jump into the products that are available from the carriers that DMI is partnered with. First, we're focusing on the simplified issue as opposed to what some of your agents may know as the accelerated underwriting programs. And those differ where the accelerated underwriting is for your clients who are going to be standard or better, typically up to age 50 and face amounts up to $1 million, although COVID has pushed those a little bit higher recently. But these are for clients who are in good health. And, if you have some dents and dings, maybe some high blood pressure, client with diabetes, they're not going to be able to get through on these accelerated underwriting programs, and they're going to have to go and have a full medical exam. And it can kind of throw a bit of a wrench into the plan that you have for your clients. These simplified issue products are always non-med. So there's no exam, no labs, no fluids, and no APSs that you or your clients are going to have to worry about. And the carriers do this by managing the risk through the underwriting and through the face amounts. Now, the underwriting is built to include up to a table 4 risk. So some clients who do have maybe some asthma, high cholesterol, diabetes, high blood pressure, they're going to be able to get through on these products, no problem. There's also a factor here with the underwriting where you don't have a ton of different underwriting classes that are available. These products blend the pricing and mortality from a preferred plus all the way down to a table 4. However, every product is issued at either a standard tobacco or a standard non-tobacco risk class. So if you do have a client who maybe received a table 2 or table 3 offer elsewhere, you can tell them, great news, I was able to get you a standard with Mutual of Omaha or with Foresters. And so having reviewed all that, we're going to go ahead and jump into the two carriers being Foresters and Mutual of Omaha that DMI has partnered with. And they're two of the leaders in the simplified issue space. And these carriers have some similarities in their product portfolio where they both offer a term and a final expense, but where they differentiate is with their permanent offerings. Foresters offers a whole life as well as current assumption UL. Mutual of Omaha offers an IUL and a GUL, and we'll dive into the products now. I want to start off with the products that are similar. So we're going to focus here on the term, and I'm going to go ahead and share my screen. So Amy, Jim, if you guys can give me a nod that you can see my screen okay? All right, perfect. So we put together these resources here for you, and they will be shared with you guys after this call is done. Amy or Jim is going to send it out to everyone. But we have the simplified issue term products. As you can see, we have the available level periods here. Foresters does offer one additional period that Mutual of Omaha doesn't, being the 25-year. Issue ages, minimum of 18, maximum of 70 with Omaha. Foresters will go all the way up to an age 80, so they will issue a 10-year term up to age 80. Minimum faces vary, with Omaha going a little bit lower than Foresters will, and the maximum faces vary depending on the issue age. And this is where I was talking about the risk. As you can see, for clients up to age 55 here, Foresters will go 400,000, but they start dropping once you hit go over that. At age 56, Foresters is going to drop all the way down to 150,000 as the max face. With Mutual of Omaha, you can see we have an additional step in here. Once you go over age 50, it drops down to 250. And then once you go to over age 60, it drops down to 150. Now, one thing that you do need to keep in mind when writing these products, these maximum face amounts that you see are going to be per life. So that is not per policy. So that means if you have a client who's 56 years old, 57 years old, and you're looking to write them coverage, and maybe they're looking for $500,000, you're not going to be able to write a $150,000 term policy from Foresters and another $150,000 whole life or UL. You're going to be capped at this maximum face amount. Also, another thing to keep in mind is if you've previously written a policy on any of your clients before and they're looking to gain additional coverage, but they age up into the next bracket, you're going to be limited. So if you have written them a $200,000 policy when they were 50 years old and they come back to you at 57 and say they'd like more, unfortunately, the maximum face for a 57-year-old with Foresters is going to be 150, and they'd be capped with a single policy that they have. Now, that doesn't mean that you can't stack policies. So you can actually have your client purchase a policy from Foresters and from Mutual of Omaha in order to gain some additional coverage. And it's great news for you because you have the ability to write 2 policies instead of 1. Now, as I mentioned earlier, the available underwriting classes, we have a standard tobacco or a standard non-tobacco. There's no table ratings and there's no, unfortunately, better classes for this. Everything is blended together. Now, the underwriting requirements are going to vary from carrier to carrier, and also some of the products are going to have some different underwriting requirements. Where there's similarities, everybody requires a MIB check and a prescription database check. Now, in order to get these products, it's a simple health questionnaire. The clients are going to ask the clients are going to answer the basic medical questions, typically about a dozen questions long, and then the carriers are going to perform these database checks. With Mutual of Omaha, as you can see, there's the addition of a motor vehicle report, and that's for issue ages 18 to 35 or at the underwriter's discretion. Mutual of Omaha also does require a phone interview for your younger clients looking for larger face amounts. And you can also have random phone interviews that take place as well. Typically, those are going to be based off of something that comes up in the prescription database check. A lot of times there's going to be a medication that's used to treat more than one ailment. So you could have a client who's maybe taking a pill for some high cholesterol, but it's also prescribed for clients who have maybe received an organ transplant. The carriers are just going to need to know what the reason for the prescription is. And once that's cleared up, they'll go ahead and issue the product as long as everything else is within the guidelines. Now, the great news about all these products that you're going to see here is they have some riders built in. So this is no additional underwriting and no additional cost. But with both carriers, you have a chronic, you have a critical, and you have a terminal illness that's available for everyone. Now, Foresters does give you a couple of other ones where you have a common carrier accidental, and then you also have a family health benefit. And I'll cover that towards the end of the session here when we talk about Foresters member benefits. There's a couple of additional elective riders that are available. Now, these riders do cost extra. With both carriers, you have an accidental death, a children's term, and a waiver of premium. Mutual of Omaha also has the ability to issue a disability income rider, which you can see right here. There's also a return of premium rider that's available on their 30-year term duration. It's not available on any of the other ones, but keep in mind, you do have that 30-year available. State availability, Foresters is available in all 50 states. Mutual of Omaha is limited. They do not do business in the state of New York. Now, with the program nuances, as you can see, we have the maximum face amounts are limited to the per life. And that's kind of the short and sweet here on the term products. Pretty easy, simple, and straightforward as you would expect a term product to be. We're going to go ahead and move into the final expense products next. Now, again, each carrier offers a product with the issue ages varying just slightly. Foresters will go from 50 to 85. Mutual of Omaha will go from 45 to 85. And you'll see we have 2 different death benefit options available, and I'll cover that at the end here. The pricing structure, both carriers offer the level and the either graded or modified. It means the same thing, but each carrier has different nomenclature for it. Minimum faces vary slightly. Maximum faces, as you can see, are much lower. These final expense products are really to be sold to help a client with burial insurance or with the burial expenses. And that's another way that these products are known, burial insurance. Your underwriting classes will remain the same and your underwriting requirements will remain the same. As you can see, there's no motor vehicle report that's required for either of these, but there are phone interviews. With Foresters, it's mandatory on every single policy written. With Mutual of Omaha, it's a random phone interview. Again, built-in riders are going to be a little different for these products because the face amounts are lower. It's really difficult to do like a chronic or critical. However, you do have terminal illness available for both products. Now, there are elective riders available. As you can see, we have the accidental death available from both carriers, and state availability, Foresters is going to be, again, do business in all 50 states. Mutual of Omaha, we do have some limits here. This product is not available in New York, Puerto Rico, or the Virgin Islands, and the graded version of the death benefit is not available in the states you see listed there. That kind of covers it for the final expense. And as I had mentioned, we're going to cover the pricing structure as well as the death benefit structure. So we have what we call the level death benefit, and we have the modified or graded. Now, a level death benefit is something all of you guys are already familiar with. If the client passes, their beneficiaries are going to receive the full death benefit, and that straightforward as you know. That changes if the client is in a little bit poorer health. If you have a client who's maybe got some more or major medical issues, they're going to issue the product at either a modified or a graded death benefit. Now, what that means is if the client were to pass within the first 2 years of the policy, their beneficiaries would only receive the premiums paid plus 10%. And both carriers, it's a very simple, straightforward equation. They take all the premiums paid, cumulative, add on 10%, and give that as the beneficiary to the clients. Now, if the clients make it and live outside of that 2-year period, then the policy reverts to that level death benefit, and the beneficiaries would receive the full amount. Additionally, there's one more caveat where if the client were to pass from an accident, they get hit by a bus or something along those lines, the beneficiaries would receive the full death benefit amount. It only happens if the client passes from natural causes or one of the ailments that caused them to go from that level death benefit down to the modified or the graded. And that covers it for the final expense. So now we're going to go ahead and we're going to move into the permanent products. And this is where you're going to see some differentiation from the two carriers and their product offerings. But before I jump into that, I'm going to check with Amy to see if we have any questions so far. All right, perfect. So with the permanent products, we're going to focus on Foresters first. We're going to discuss the products themselves, and then I'll take you guys through the application process. Then we'll focus on Mutual of Omaha as well. So with Foresters, we have a whole life product and we have a universal life product. Now, Foresters' aim here and their goal as a carrier is to keep things simple. Because of that, we only have two premium streams available. We have a 20-year or we have a pay to 100. There really isn't any additional flexibility in the way that Foresters builds their products. So please keep that in mind when you're quoting these to your clients. Now, the UL product is just a normal UL, so you are able to change the premium stream if you want to do 10 pay, a 15 pay. If you have some younger clients and you want to do a pay to 65, you're able to do that here. As you can see, issue ages will go all the way up to age 75, and the minimum issue ages are 18, but they do make a juvenile or a children's whole life product available if you have clients who are a little bit younger. Much like the other products, these are built to include up to 4 tables of risk and maintain a smaller minimum face at that $25,000 mark, but the maximum face amount is going to remain the same at $400,000, stepping down once the client goes to age 56. Again, you're going to see that we have the same underwriting classes, the same underwriting requirements with the database checks, and the same benefits that are available. Elective riders are going to be very similar to what you saw on the term. However, with the universal life option, you do have this guaranteed purchase, which is going to allow the clients to purchase additional insurance at 5-year increments on certain policy anniversaries or certain milestones regarding the client's age. And once again, these products are available in all 50 states. Now for the application process, I'm sure most of you on this call have taken an e-application before, and Foresters is not going to be any different. You have the ability to do an iPipeline e-app. You can log in through your own instance of iPipeline, or you can log into Foresters and click on Start a New App, and it will take you to the Foresters instance of iPipeline. You're going to create a case as normal, and you're going to ask the client all the questions. just as you do normally. You're going to see all the check boxes there on the left-hand side, and you're not going to be able to continue until those check boxes are all green. Once they are, you can submit the case. An email will be sent to the client, which is the HIPAA authorization. The client is going to need to sign that and return it before the policy can move forward.
And the DMI HIPAA authorization needs to go with it too.
Thank you, Amy.
Just so everybody knows.
And at that point, once everything is signed, Foresters is going to begin the database checks. So they're going to do that MIB database, they're going to do the prescription database check. These checks can last anywhere from 5 to 30 minutes. It's a fully automated system that Foresters has in place. But once those are done and everything checks out, the policy is approved. And you will receive notification that the policy has been approved, and an email will be generated and sent to the client automatically to have them sign and to accept the policy and to remit the payment. Once that's done, typical turnaround time for that is anywhere between 30 minutes to an hour. Foresters can go ahead and issue the policy, and it'll be considered in force as soon as that payment is made. So if the payment is remitted on the same day, the policy will be considered in force the very next day. If the client asks for a future date, it'll be in force on that date. Now, with Mutual of Omaha, the applications process is going to be a little bit different. We'll cover that after we cover the products, but it is actually a little bit speedier. With Mutual of Omaha, we have two permanent products, being their GUL Express, which is a guaranteed product, and their IUL Express, which is their cash value product. Now, with Mutual of Omaha, their issue ages and face amounts are going to be a little bit different depending on the tobacco status. So as you can see, for a client who's a non-tobacco user, they'll issue up to age 70. For clients who use tobacco, maximum issue age is going to be age 65. And that goes for the maximum face amounts too. We actually need to copy this over to this one here, and we'll make sure we get that adjustment made when these are sent over to you guys. But for 18 to 50, we have 300. 51 to 65, it does drop down to that 250 level. And then depending on the tobacco status is where you're going to see it from the 61 through age 70. They'll issue up to age 65 for tobacco users and up to age 70 for non-tobacco users. So pretty straightforward there. Their underwriting requirements are going to be very similar to what you saw in their term products, where we have the MIB as well as the prescription database. MVR checks are going to be for certain ages or at the underwriter discretion. And then we have the mandatory phone interview for the clients who are younger, looking for those larger face amounts. Again, these products have those riders built in, so another added benefit for your client, where we have the chronic, critical, and terminal illness that is available for everybody. It's automatically issued at no additional cost. And as you can see, on the IUL product, there's a couple of additional riders that aren't included on some of the other ones. You have that disability continuation of plan premium. You have the guaranteed insurability rider, which will also allow your clients to purchase additional insurance on policy anniversaries or certain milestone ages. You have the disability waiver of charges and the waiver of surrender charges. Once again, Omaha does not do business in New York, so those products are not available in the state, and those maximum face amounts that you see are going to be per life. Now, Mutual of Omaha's process is a little bit different than Foresters with their e-app that you guys are all going to be familiar with. Omaha does things just a little bit backwards to make things faster for you and your clients. So rather than having you take the application up front, Mutual of Omaha is going to have the client sign the HIPAA authorization right off of the bat. So you're going to log into their instance through the Mutual of Omaha website or through your instance of iPipeline, and it's going to send the HIPAA up front. The client is going to need to sign that in order to continue with the application. You will not be able to move forward until that is done. But once it's done, Mutual of Omaha is going to start those database checks right then and there. So while you're taking the rest of the application with the client, you're asking all the medical questions, Omaha's already completed both the MIB and the prescription database check. So by the time you get to the end of the app 10, 15 minutes later, and you click on that submit button, you'll find out right there on the spot whether or not the client was approved. If the client was approved, it says, congratulations, your application has been approved, and it'll give you the client's policy number right there on that screen. At that point, Mutual of Omaha will also generate an email to the client to have them sign to accept the policy and remit payment. Once that's done and the client signs and pays, an email will be sent to you for you to countersign and submit formally to Mutual of Omaha. They do need to get some eyes on this, so they're going to have an underwriter take a look at it just to make sure everything matches and is in good order. And once they do and they approve it, it's going to be considered in force since payment was already submitted. The typical done from taking the application to have the policy in force is 24 hours currently. So this is going to save you a lot of time where you're not going to have to go back and meet with clients 2, 3, 4 times in order to have signed delivery requirements, have applications redone, or to get the payment. It's all done in one stop. And the process is so quick, you can sell your clients on their lunch break. Now, that covers it with Mutual of Omaha. Oh, and I'm sorry, one more thing I forgot to add on. Once the policy is issued by Mutual of Omaha, you and your client will both receive a PDF with the policy. So you don't have to worry about anything being mailed or sent through that. You're both going to receive a copy. And that covers it for Mutual of Omaha and the simplified issue products as a whole. Now, Amy, did we have any questions on either the products, the carriers, or the process here with the e-application?
We'll open up the floodgates for questions now, people. If you've got something, go ahead and feel free to hit the chat button and go ahead and ask questions if you have got that. So we'll give everybody a minute because I know not everybody types crazy fast like I do. And if you've got, and if you don't want to ask questions now and you want to ask them later, you know how to find myself, you know how to find Jim. If I need to grab Dave, I can always grab Dave too. So the good news is we're all here to help you. Oh, here we go, Roz. Guaranteed issue for final expense.
So these products are simplified issue. They're not guaranteed issue. The guaranteed issue, there's very, very few carriers that work in this space now, as most of them have been getting out of the guarantee and into the simplified issue space. Amy can work with you to get you a list of those carriers that are on the DMI platform a little bit later.
No problem, Ross. I will take care of that for you. Anybody else? It's like everybody's quiet. Everybody must have had lunch and be tired.
Amy, Mr. Dandridge has raised his hand.
All right, Johnny, what's up?
So I think we got to promote him. Give me a sec.
Yep. Jim's controlling things, so.
I'll stop my screen share for now.
All right.
John, you're on mute.
Okay, can you hear me now?
Now you're great. How are you? Good to see you as always.
I'm great. I listen kind of slow, but I got the impression that these simplified products are for people who have some health issues that wouldn't ordinarily make it past the underwriting.
So this is going to be for clients who do have some dents and dings, but it's also going to be for your healthy clients, and it's going to be a fast, easy way for them to get some coverage. For example, if you have a client who is maybe afraid of needles and doesn't want to get poked and prodded to get their insurance, this is a great way to get them coverage that's non-invasive. Another one is for clients who don't have a lot of time to get their insurance. Occasionally you'll see a life insurance requirement for divorce decrees, small business association loans, personal loans or mortgages. And a lot of those come at the 11th hour. Well, now you have an option to have your client have coverage in place in less than a day.
Mm-hmm.
Which is huge.
I don't know if this is the right question for this particular class, but what's the difference between an index UL and a regular UL?
So the guaranteed product is basically that. As long as you pay the premiums on time, the policy will remain in force. The IUL product is the cash value in the policy is directly tied to an index account. With Mutual of Omaha's product, it's the S&P 500. So as the market performs a little bit better, your clients are going to build more cash value in the policy, as opposed to a GUL, which is not going to have any cash value unless you overfund it, and that can get quite expensive. So this is something that your clients will be able to save a little bit of money up front, build some cash value over the long term, and then they'll have access to that cash value to either pay the policy fees down the road, or in the event of withdrawals or loans, if they want to do a little bit of additional life insurance as a retirement plan.
Okay, thanks.
You bet. Anything else? Anybody else? Going once, going twice. Well, thank you everyone for tuning in. The great news is, like David mentioned, we have all this information for you. So I will send that off for you. So thank you very much, Dave, for helping us with everything and going over all of that for our agents today. Certainly appreciate that.
I'm glad to do it.
Yeah, thank you. Well, anything, oh, sorry, I've got allergies today, so I apologize, everybody. Anybody else, if there's anything we haven't answered today, you would like an answer for, feel free to email myself and Jim as always, or call us, whichever way you like to communicate. We're great with that. We appreciate you tuning in very much this week and hope you got some great value added out of the simplified issue products as well.